Welcome to the channel. We start with massive moves in global finance and technology. Alphabet is taking a huge step, planning its very first yen bond sale to fuel its ambitious artificial intelligence goals. This move signals a major shift in how the technology giant is securing the massive capital needed for its next phase of expansion. And we break down exactly what this bond issuance means for the future of AI infrastructure.
Here's a simple way to protect your phone without stress. This ALEN 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Next up, we dive into the market action and geopolitical tensions. President Donald Trump has officially rejected Iran's counteroffer to the U.S. peace proposal, labeling Tehran's response as totally unacceptable in a public statement. We explore the immediate fallout from this diplomatic clash and how it's influencing volatile markets, especially as crude oil prices rebound. Now let's talk about the tech giants and retail strategies. We look at the incredible performance of Alphabet, noting its stock climb and how its AI positioning is translating into real-world gains. We also shift gears to retail, as Target is aggressively targeting families by launching new baby boutiques to recapture market share from competitors. Finally, we look at the deep infrastructure driving this boom. We examine how companies like Broadcom and GE Vernova are becoming critical players in the AI build-out, with massive orders pouring in for power and cooling systems. Don't miss out on these crucial market insights. Subscribe now to get all the latest business news delivered straight to your inbox. Alphabet is reportedly considering issuing its first yen bond to finance its ambitious artificial intelligence goals. This strategic financial move signals a significant commitment by the tech giant to accelerate its AI research and development initiatives. The decision is being weighed by Alphabet's leadership as part of its ongoing strategy to maintain a competitive edge in the rapidly evolving AI landscape. Analysts are watching closely to see if this bond issuance will be approved and what specific allocation of funds will be dedicated to AI projects. The move underscores the massive investment required to power the next generation of AI technology and positions Alphabet as a key player in the global technology sector. In a morning market roundup, key developments spanned international diplomacy, major tech stocks, consumer trends, and retail strategy. President Donald Trump strongly rejected Iran's recent counteroffer to a U.S. peace proposal, labeling Tehran's response as totally unacceptable on Truth Social. Investor focus remained high as the S&P 500 and Nasdaq Composite concluded the week at record highs, marking their longest weekly winning streaks since 2024. Alphabet benefited significantly, with its stock climbing over 160% in the last year, establishing it as the top-performing trillion-dollar U.S. tech company during that period. Analysts increasingly view Alphabet as an artificial intelligence leader, with its market capitalization briefly surpassing Nvidia's in extended trading last week, despite Nvidia's competitors like Advanced Micro Devices and Intel also surging. The AI investment fervor continues, with Nvidia committing over $40 billion to equity bets this year. Furthermore, the digital content landscape is seeing specialized support as YouTube creators utilize strategists to enhance virality and income. In the retail sector, Target is executing a strategy to recapture family shoppers by launching baby boutiques in approximately 10% of its stores. This initiative aims to attract families, a key consumer base, by offering high-end items, such as a $1,000 stroller, alongside new baby merchandise. Target's merchandising chief noted that families with children visit stores twice as often, and those with children under 6 spend double the amount. Regarding automotive finance, Capital One Auto President Sanjeev Yajnik expressed confidence, noting that consumer spending on vehicles is not increasing significantly. Data indicates that the percentage of income spent on cars has remained nearly flat since 2019, even as monthly payments have risen. Yajnik attributed this stability to consumer caution, emphasizing that vehicle purchases are not considered discretionary spending. Overall, the market snapshot highlighted strong performance in large-cap tech, targeted retail revitalization efforts, and cautious consumer behavior in the automotive sector. U.S. stock markets are currently at record highs, fueled by robust first-quarter earnings and the ongoing artificial intelligence trade. The S&P 500 and Nasdaq Composite both concluded the last trading week at new peaks. Amid market volatility stemming from a rebound in crude oil prices following President Donald Trump's strong statement regarding Iran's response to a Middle East conflict proposal, investment focus is shifting toward infrastructure providers. Subho Mullick, founder and CEO of Appreciate, highlighted that Q1 2026 corporate performance was among the strongest in 5 years, with 84% of S&P 500 companies beating earnings estimates by an average margin of 18.22%, nearly triple the historical average. Mullick noted a clear bifurcation in performance, with semiconductor and hardware sectors surging while software and consulting names declined. He identified the key beneficiaries of the current AI infrastructure build-out. Mullick suggests investors consider short-term purchases in 5 specific stocks over the next 1 to 2 weeks, focusing on the infrastructure layer and the established, Magnificent 7 names that have decoupled from broader index underperformance. Among the recommended buys, Alphabet stands out within the Magnificent 7, showing a 23% year-to-date gain, driven by Google Cloud achieving its fastest growth rate on record, soaring 63% to $20 billion in Q1 2026. This growth is visibly translating into revenue across both cloud and advertising segments. Amazon also features prominently, with Q1 earnings per share beating consensus and advertising revenue jumping 24%. Despite significant capital expenditure commitments for 2026, the acceleration in Oz growth signals that the necessary AI cloud infrastructure is finding immediate, scaled demand. Furthermore, the report emphasizes that the $700 billion AI capital expenditure cycle extends beyond chip manufacturers. Broadcom is positioned as a critical enabler, with its custom silicon integrated into major AI platforms, driving an 106% year-on-year increase in AI revenue. The physical backbone of this build-out is also crucial. General Electric Vernova is noted for its role in grid infrastructure, booking $18.3 billion in orders in Q1 2026, reflecting massive projected demand for power systems. Vertiv, which supplies cooling and power distribution systems, is highlighted for its explosive order growth, with Q4 2025 organic orders surging 252% year-on-year. Mullick stressed that every dollar invested in data center infrastructure creates a thermal management obligation, a commitment now evidenced by Vertiv's substantial backlog and raised full-year guidance, confirming that infrastructure demands are converting into firm, deliverable contracts. Google parent Alphabet is pivoting to global capital markets, initiating its first bond sale denominated in Japanese yen to fuel aggressive expansion in artificial intelligence infrastructure. This strategic move signals a broader trend among major technology firms seeking external debt financing to support soaring AI investment demands. According to LSEG data, the proposed issuance is expected to total several hundred billion yen. To manage this transaction, Alphabet has engaged financial institutions including Mizuho Financial Group, Bank of America, and Morgan Stanley. This capital raise comes as Alphabet significantly increases its capital expenditure forecast, raising it by $5 billion to a range between $180 billion and $190 billion, with further spending anticipated in 2027. The company has already demonstrated a willingness to tap international debt markets, having raised nearly $17 billion last week through prior offerings, including a €9 billion bond issuance. The shift toward debt financing underscores the escalating costs associated with building AI infrastructure. Industry estimates project that big tech companies will spend over $700 billion on AI infrastructure this year, a substantial increase from the roughly $410 billion invested in 2025. This environment has significantly boosted investor sentiment toward Alphabet, which is increasingly viewed as a key beneficiary of the AI boom. Alphabet stock has surged approximately 160% over the last year, driven by confidence in its position across the AI ecosystem. This optimism is bolstered by strategic advantages, including its Gemini and DeepMind AI platforms, its large cloud computing business, proprietary tensor processing units, and extensive distribution channels. This diversified exposure strengthens investor belief that Alphabet can monetize AI across multiple segments. The move to issue yen bonds diversifies Alphabet's funding strategy amid rising demands for capital in data centers and cloud computing. The activity follows reports, such as commitments from AI startup Anthropic, indicating massive spending on cloud infrastructure, reinforcing the narrative that Alphabet is uniquely positioned to capitalize on the current technological shift.